Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Bill Dodd and thanks for joining us today on Market Journal. We hope everyone had a safe and happy Thanksgiving holiday. We're getting back into the swing of things here at the Market Journal studio, and we have a great show in store for you today. So let's see what's happening in the ag industry this week. And starting things off today, we're taking a closer look at the University of Nebraska-Lincoln's on-farm research program. More precisely, how this program allows ag producers to get hands-on experience with new and groundbreaking agricultural technologies. We were fortunate enough to catch up with Extension Educator Thompson at this year's Husker Harvest Days to see what technologies they were highlighting and how producers can get involved. One of the main goals of UNL's on-farm research is to implement a statewide on-farm research program that addresses critical farmer production, profitability, and natural resource challenges. One avenue of study also includes new technologies available to producers. At this year's Husker Harvest Days, Extension Educator Thompson gave us a run-through of some of the technologies they were there to highlight, and nitrogen management took the spotlight.
Yeah, so some of the technologies that we're sharing about today are related to nitrogen management, looking at opportunities to do more precise nitrogen management through using sensors or different commercially available models. That'll help producers apply a different amount of nitrogen in different portions of the field to try to better match the crop's nitrogen need to the supply to the actual crop nitrogen need.
Another technology that's been utilized more and more by agricultural producers in the last several years are drones. Nowadays, these multifunctional machines are capable of far more than providing producers a bird's eye view.
So we do have some drones on display. One of the ways we're using this drone, as I mentioned, is for nitrogen management. So we have some sensors on that drone that helps us assess the crop's nitrogen status and know when we need to apply more nitrogen to try to make more precise nitrogen management decisions. But producers are using drones for other things as well. In the last couple years, seeing a lot more use in stand counts, trying to do more assessments across a more broad area of the field than maybe we would normally cover if we're out crop scouting, and getting an assessment using those drones to do stand counts around the field. And then also just for kind of general crop scouting as well, really provides a valuable tool, especially later in the season as we think about how challenging it is for crop scouts to really get out through the field and cover a very wide amount of the field on foot. And so drones can really give us some view of what's going on some of those areas of the field that are hard to reach, try to help identify disease issues or insect pressure. Maybe there's some areas that have lodging, and identify those things earlier on and make proactive decisions.
When it comes to implementing these new technologies on your farm, the price tag can sometimes seem astronomical. However, participating in Nebraska's on-farm research can help give you an inside track when it comes to beefing up your operation's technological resources.
Yeah, so a lot of different technologies. Of course, there's have a different approach of how they might try to see if they want to implement those in their operation. On-farm research can be a great way to start assessing some of those. We have a lot of producers trying different technologies through our on-farm research network, comparing that maybe a technology that they've purchased to their traditional management without using that technology. So that can be a great way to look at our on-farm research results and see what other producers have found. As well as some, really allow you to test them without a huge upfront cost. And so those are great things to also start testing through on-farm research and see what the benefit to your operation would be for implementing that technology. So we're really trying to help producers be able to evaluate different production products and practices using their technologies. For example, using the yield monitoring equipment that a lot of producers have on their equipment already, we can evaluate different products and practices and help through our on-farm research network kind of have a breakdown of the impact of using a different product or practice. So through the on-farm research network, we're really trying to come alongside producers and help them make sure they're making informed decisions and have the information they need to make confident decisions.
If you're interested in newer ag technologies and how they can assist you in terms of your overall production, then one of the best places you can start is getting involved with Nebraska's on-farm research. If you'd like to learn more about the University of Nebraska-Lincoln's on-farm research, you can visit on-farm-research.unl.edu for more information. If you're interested in this year's on-farm research results, statewide meetings are being planned for this upcoming February. We've taken the liberty of adding a link with more information on the Market Journal website. And moving on over to the markets now, and we're coming off a short week in the commodity markets due to the Thanksgiving holiday. However, we had some notable activity in the overseas markets. Beyond that, the Omicron variant of the COVID-19 virus has been making the rounds in the headlines. Here this week to discuss that and more is North Dakota State University ag economist Dr. Frayne Olson. Frayne, thank you so much for being here with us today.
Yeah, always my pleasure.
And starting things off, we had a short week due to the Thanksgiving holiday here in the U.S. Were there any notable developments in the overseas markets over the holiday weekend?
Well, just a couple of things. First, we got some reports from Australia that they had some very heavy rains, especially in kind of their southeastern growing region, New South Wales area. And there's some concerns about the wheat quality because they're nearing their harvest time window now. And so there's some concern about the wheat quality and how much of that wheat is going to turn out to be feed quality rather than a milling quality. They're anticipating a very large crop, but again, the quality profile, especially for wheat, is a very sensitive topic.
And Frayne, we've been seeing some fluctuation in wheat futures and a rise in export sales. To what can we attribute these shifts in momentum?
Well, okay, so there are a couple things going on. As I mentioned, there's some issues showing up in the Australian wheat. We already know, at least here in the northern plains and into Canada, the spring wheat crop is very, very tight because of the drought. So the high-end, the high-protein wheats, those blend wheats that we often use to get the quality products, the profile of flour that's normally needed is extremely tight supply. But we're also seeing global prices coming up, in particular because of some issues now showing up in Russia. Russia, even though they had a very good crop, the Russian government has put some export taxes on their wheat to try and keep domestic prices a little bit lower. So there's some food inflation going on in Russia. There's some concerns about the volume of exports from Russia into the global market. So they have a variable rate tax that they have now imposed. And those tax rates and as a result, global prices are starting to rise. The U.S. right now, because of some of the freight rates, the U.S. is a little bit out of the market in the global wheat area. But as in the last several weeks, we've started seeing some of those export shipping rates, the freight rates for bulk freight, starting to drop off a little bit. So we are starting to pick up some export business out of the U.S., which is a good thing. Again, we're going to be watching what's going on very, very closely when it comes to the wheat quality globally as well as the wheat supply. So we're starting to tighten up a little bit on our balance sheet on wheat.
And of course, corn exports and sales also ended on a marketing year high last week. How did that shake out, and how are things looking as trade ramps up after the holiday weekend?
Yeah, so typically we're from Thanksgiving into the Christmas holidays, or actually into the New Year, this tends to be a very quiet time period within the grain markets. It's the holiday doldrums, if you will. But we are seeing some pretty good, strong demand for U.S. corn. China is part of that. Of course, the big question is, what is the Chinese corn demand given the higher hog prices and the crushing margins for the soybeans coming out of China? We're a little bit concerned about some inflationary problems going on in China right now, and will they be coming into the U.S. market and purchasing as much corn and soybeans as we originally expected? But on the corn front, their purchasing seems to be on a regular pace. We look at our other major customers for corn, in particular Mexico and Japan. Again, they're purchasing on kind of a normal pace that we're seeing. We're also seeing some issues now, some questions and concerns showing up in southern Brazil with their rainfall. Now the crop that they're planting right now is their summer crop, which tends to be a bit smaller than their winter crop, which is the safrinha crop. So Brazil has two crops of corn that they normally plant and harvest. The second crop is the one that is the larger of the two, but we are watching what's going on in the first crop corn in Brazil as well. So there's a lot of little things that are adjusting. Our export pace out of the U.S. is good. Some of our major competitors in the former Brazil and Argentina and Ukraine are competitive, but they don't quite have the volumes that are in exportable positions right now. So we're starting to see some of the global corn prices also be very supportive.
And of course, the big news last week was the Omicron variant. How much is this new COVID development looming over the market?
Yeah. So it's one of those things that we have in the back of our heads. It's not necessarily a direct impact on grain prices directly, but indirectly, psychologically, it does have an impact on the marketplace. We're also watching then how is the investment community adjusting to this new information. So there are some concerns about global economic growth and what that's going to mean for exchange rates. So really that's an indirect effect, not necessarily a direct effect. So it is something the grain markets are watching, but we're kind of keeping an eye on the sidelines right now.
And Frayne, before we wrap up today, do you have any marketing or risk management advice you'd like to share with our viewers at home?
Yeah, I guess the major thing right now, especially for those that have old crop soybeans left, because of the rapid planting progress that they've had in Brazil, everybody right now is expecting a very large crop coming out of the Brazilian production season. So our export window for U.S. soybeans is going to be a little bit tighter, a little bit shorter than we normally see, if they, again, can get the rainfall and the kind of production that everybody's anticipating. So if you have old crop soybeans in the bin right now, I'd be watching the markets very, very closely, try and get those priced and hopefully delivered before probably the end of January. Normally we have into the February time period, but because of, again, the rapid planting progress and the early crop progress that they're having in Brazil, our export window out of the U.S. is going to be a bit shorter than normal. So just be watching that and trying to plan ahead.
Well, I think that's going to wrap up our time this week. Frayne, thank you so much for your time today.
All right, thank you very much. I appreciate the opportunity to visit.
And moving over to the cattle markets, and we were joined by UNL Livestock Market Analyst Elliott Dennis earlier this week to discuss a multitude of topics around the beef markets. But we began our discussion by taking a look at what's been causing price fluctuations in the cattle markets. It seems like we kind of had a rally happening throughout the cash cattle market, kind of prompted a bullish push throughout the sector, but it kind of seems to have died down just as fast. What do you think is driving that kind of fluctuation?
Yeah, I think some of it, if we're talking about like the feeder cattle market, we had a pretty strong push in September. We were at pretty much all-time highs, and then as we started to get into the fall or the fall run, we started to see a lot of that sell-off happen, and then I think the market was a bit bearish on that. They sold off a bit too much, and then as we started to see those numbers come through a bit and get an idea of what that feeder cattle supply is going to be through the into the winter and into next spring, I think those prices started to come up, and right now we're pretty much middling. Right now we've hit some resistance, but right now it's over the last week or so it's been pretty constant. And similar stories could be said of live cattle and even of December corn.
So we worked through the Thanksgiving season. We're on to the extended holiday season here. Beef demand seems to be tracking upward as consumer beef prices have been steadily increasing. Is this a trend that consumers should be getting used to?
I think people are recognizing that there's inflation happening throughout the entire sector, and so I think there is a bit of consumer acceptance for higher prices. Now, what that ultimately means is maybe they're willing to pay for that in the short run, but long-term budgets are going to adjust. I think largely we're seeing larger beef demand because of what we call substitution effects. And so when we have really high pork prices as we go into the fall, as we've been having, people start to substitute between pork and beef. And so when you have kind of comparable products, we tend to prefer one item over the other. And I think what we're seeing is a lot of that substitution happening. People prefer pork going into the winter months, but elevated pork prices have I think shaved off some of that demand from pork and has consequently shifted into greater beef demand.
And it seems like we've been seeing improving stability in the cattle market since the initial COVID-19 outbreak. Now we got the Omicron variant in the headlines here. How much has the market been reacting on that front? And I guess what are you paying close attention to as this kind of moves forward?
I think some of that pullback that you mentioned in the beginning has to do with some of that market kind of tentativeness. What we normally see is that it's not necessarily the COVID-19 itself, but more the government reactions or people's reactions to the variant. And so, for example, if we have a lot of stay-at-home orders, or if we have conditions where people might reduce their food service demand, then we'd start to see a lot of that have an impact on the livestock production markets. Another way that it could potentially affect it would be how it affects our economy. Right now we have a weakening dollar, which means it's very inexpensive for us to export. A lot of people want our product, and so that's creating a large demand pull. But if the economy is able to strengthen, and we're able to get some of this new variant under control, then I think we can start to see that dollar start to strengthen a little bit, assuming we get inflation under control.
So we're just about to close out 2021. What challenges do you see that are facing the cattle industry as we head into 2022?
I think it's not necessarily a challenge, but I think something to appreciate into 2022, looking back on 2021, and that's been outstanding demand. While we had struggles getting supply through, and really demand has been the winner of 2021, in my opinion, just because we saw strong exports to China, to Hong Kong, to Japan, South Korea. All our major players were huge exporting, and that caused some of that wholesale beef price to rise. And then we saw, even with higher retail prices, we saw a lot of consumer demand. That has really helped bolster or support some of those prices that we've seen across all of the protein segment, beef, pork, and chicken. What I'm going to be watching into 2022 is, do we continue to sustain high levels of beef demand? We're at, to give you appreciation, we're at pretty much 35, 40-year highs for beef demand. So very, very strong beef demand right now. Will we continue to have that beef demand into 2022, given inflation, as people start to rearrange their budgets, especially if we believe inflation is going to be more long-term? That's what I'm going to be looking for, but also recognizing that we've had a pretty good year with demand, both across all the protein segments.
And before we wrap up our time, do you got any marketing or risk management advice that you'd like to share with our viewers?
Yeah, so I think it's always important to match the risk management tool to the market situation. Right now, when we have increasing prices we're pretty certain that they're going to be steady to higher, all that risk can pretty much be taken into the cash market. So no real need to do that risk management tools. However, if we're pretty certain that prices are going to potentially start to decline as things like maybe demand erode, or maybe we have changing supply conditions due to drought, then what we're really thinking about is basis. Just real quick, if we have basis we think is going to be steady to higher, that risk management tool is going to be either selling futures or buying something like LRP. If we believe that basis is going to weaken, then forward contracting, cash contracting, selling on the video are going to be the tools that are going to mitigate the most amount of output price risk.
Thanks again to Frayne and Elliott for their time and expertise this week. Next week, we'll be joined by Iowa State University Extension livestock economist Lee Schultz and Heartland Farm Partners president Jeff Peterson for a look at the markets. If you have a question you'd like for us to ask, please get in touch via social media or email, and I'll be sure to pass that question along. Moving on, and Nebraska's Sandhills is truly cattle country, but the region is not without challenges. John Ravenscroft and his family have been grazing cattle on their 3-Bar Cattle Company ranch south of Nensel for decades, so they know all about those challenges. That's why Ravenscroft always has a plan. He and his family make a grazing plan and a financial plan every year, and John acknowledges that sometimes plans have to be tweaked in the middle of the grazing season in order to make everything work out. You can learn all about the Ravenscroft operation in the December issue of Nebraska Farmer. And it's time once again for weather with Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. Now, we've seen some pretty great weather since Turkey Day. What can we expect as we get into the front end of December?
Well, Bill, hopefully everybody had a nice holiday weekend and we've seen some warm weather across the state. We continue that into the early part of this week. Now, from a perspective of going forward, it does look like we're going to see some slightly cooler temperatures, maybe more seasonal-like as we get a few days that we get some cold frontal action in the region. But overall, this next 7-day period, we're once again going to remain above normal when you figure the highs and lows in. And so this trend that we've been basically in for much of the month of November will continue, although there are some signs that we're going to start to see a little bit more active weather to our west, and perhaps that will start to pull in some of that cooler air that's been locked up into place over Alaska and the northwestern portions of Canada. As those systems move across the country, we should start to see some of that colder air pull in. And I'm not saying that we're going to see these big sub-zero temperatures, but we definitely are going to see a much cooler trend compared to the 60s and 70s we've been seeing recently. So let's go to the upper air models and see what we have in store as we go through this next 7-day period. First thing I'll draw your attention to is we have the main general boundary just lined to the north of Nebraska. That's where most of the energy will focus. As this piece of energy to our west starts to move through, it will start to strengthen, but we do have low pressure setting up over portions of south central Montana. That's going to generate some snowfall across the very extreme northern Rockies and spreading out into the Dakotas. For us, we're going to be south of the front, remaining high and dry, but that front will come through during the overnight hours and bring that colder air into our region and also intensify this trough. So that'll add energy to these low pressure systems that will form at the base of the trough down in southern Texas and also over the Great Lakes. That'll be where the most concentrated precipitation is. Maybe some light flurry activity across the panhandle, but no accumulation expected. Now we get a little break on Monday as we get between these troughs, but another system to the west is going to eject another piece of low pressure out into the northern central Rockies, and we'll start to see snowfall generating and heavy precipitation across the northwestern United States. Now, the piece of that energy ejects rapidly toward the east. The other piece of energy drops down into the southwest, and we see low pressure forming over the Texas Panhandle. So it's very possible that we will finally see a little bit of scattered precipitation in these very extreme dry areas in the southwestern part of Texas. That system kind of weakens as it moves toward the east, and we turn our attention to another system coming to the Pacific Northwest. So that'll keep more of a zonal flow, and we'll see some moderation of temperatures here in the Central Plains. Going to be probably pushing back toward the 50s. As most of the precipitation remains well to our northwest and well to our east. Now, as we get into Thursday, this system starts to dig down. That's going to pull some cold air down along the Pacific coast, and we'll also see the first piece of energy ejecting out of that wave into portions of southwestern Wyoming. So you can see that the GFS model at least has shown a very widespread concentrated area of heavy precipitation, and this low actually dives down basically into Southern California by Friday. Very intense low pressure system. First, another wave ejects out into southeastern Colorado. That should lift moisture up into the central and northern plains, and we might see some accumulating snowfall. Particularly the best area will be south central portions of North Dakota and northern half of South Dakota, where we could see an excess of 6 inches. Heavier snow and rainfall in the southern and southwestern United States. And as we get into next weekend, I would expect to see some of this activity push out into the central plains. Whether it'll be in the form of rain or snow remains to be a question, and it may be lifting either farther to the north, or if it pulls down southward, we'll see better accumulations across Nebraska. As we go into the 8 to 14-day forecast, with that cold air coming in, the GFS models are indicating that cold air, but CPC is pushing warmer conditions as we go into the end of next week to the following Tuesday, and precipitation. More activity in the west, below normal precipitation in the southern and central plains.
Thanks, Al. Finally today, with high school graduations only a few months away and some students graduating early, many will be looking to continue their education. For those seeking a degree in an agricultural field of study, the University of Lincoln has all the bells and whistles any student would want out of an agricultural education. However, the Nebraska College of Technical Agriculture is another great option for students to consider. We met with NCTA admissions recruiter Rulon Taylor to see what NCTA has to offer potential applicants.
NCTA is a 2-year technical college that focuses on a broad net of agriculture. There are extensive options for students looking to continue their education in agriculture.
NCTA, it's a 2-year agricultural tech school, so we focus on ag there. So, all different facets of it, so whether it's ag mechanics, ag ed, animal science, agronomy, vet tech. We kind of try and throw a broad net over all of agriculture, and it's a really good place to go and learn about ag.
Agriculture is important to the state of Nebraska in many ways. One way to keep the industry moving in the state is by providing a great education to students at NCTA.
As we know, in Nebraska, ag is our biggest industry. It's super important to the state, both economically and then just sentimentally. I mean, we're ag people. We love our cows and we love our corn, right? So at NCTA, we know this, and we really want to move the ag industry forward. And one of the best ways that we can do that is providing a great education to our young people. There's such a high demand for young students going into agriculture, and if we can provide these people with a great education and set them up to enter the workforce, that's just really amazing, and we hope that that's what we can accomplish at NCTA.
If you or someone you know is looking for an affordable option to continue your education while still getting hands-on experience in a small community environment, NCTA would be a great place to start.
Some of the advantages of starting at NCTA is, of course, it's a small town place. So if you like a small community, small class sizes, kind of that family feel, NCTA is a perfect place. Of course, you got to look at the cost too. NCTA it's a low cost institution, so you can come to NCTA for those first 2 years, get a school for a little bit cheaper, and then move on. And what I love the most about NCTA is how hands-on it is. So if you're a person who loves to work with your hands, learn with your hands, interact with the animals, tear into an engine, it's a perfect place. So you can get that hands-on experience at NCTA and then move on to finish out a degree there at UNL.
For those interested in a career in agriculture, there are no shortages of job offers for graduates of NCTA.
At NCTA, we get more job offers than we have students. I mean, it's amazing how big a demand there is for these students going into the industry. Whether that is in vet tech, animal science, equine management, agronomy, it doesn't matter. There's just so many jobs available that our job placement is, in the 99th percentile. So many students get jobs after college, and there's a fair amount that go back to the farm, but there's just great opportunities for graduates of NCTA.
If you or someone you know is looking for an affordable option to continue your education while still getting hands-on experience in a small community environment, NCTA would be a great place to start. Reporting for Market Journal, I'm Mike Straub.
And a big thanks to Mike. He's our newest producer on the show, and you'll be hearing a lot more from him in the future. In the meantime, if you'd like to learn more information on the Nebraska College of Technical Agriculture or any future events they have taking place, you can visit their website at ncta.unl.edu. And that's going to do it for this week's show. If you missed a story, be sure to download the Market Journal mobile app or follow us on social media to join in on the conversation. We'll hope to see you right back here next time. Till then, I'm Bill Dodd. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.